Here are some differing developments regarding how governments view and use crypto. Starting with New Hampshire, which became the first U.S. state to pass a law allowing it to hold Bitcoin as part of its financial reserves, with the governor's signature on May 6, 2025. The bill, titled HB 302, permits the state's treasurer to purchase and hold Bitcoin and other major digital assets either directly or through regulated investment products, such as exchange-traded funds. However, the state can only hold up to 5% of its total funds in Bitcoin for risk management purposes. All digital assets must be stored under strict U.S. regulated custody in approved custodians or state-controlled wallets. This move could inspire other states to follow suit as interest grows nationwide. In contrast, the UK is not considering using Bitcoin as a reserve currency, despite the US, under President Trump's direction, exploring the option, according to comments from an unknown official. The unnamed official said that the idea of a Bitcoin reserve is not suitable for the UK market. Meanwhile, the US has been integrating cryptocurrency into its economic strategy and has implemented several initiatives, such as creating a Bitcoin reserve and overhauling financial regulators like the SEC. Reynolds emphasized the importance of close regulatory coordination between the UK and the US, despite differing views on reserves. A bilateral working group focused on digital asset policy has been established, with a new regulatory forum set to meet in June for further discussions on oversight and cross-border innovation. While the UK has not pursued a state-backed crypto reserve, it is exploring how blockchain can streamline government bond issuance, potentially becoming one of the first major economies to issue debt on-chain. Over at India's Supreme Court, there have been hints at the need for crypto regulations due to the lack of clarity from the Indian government. Cryptocurrencies like Bitcoin are not banned or regulated in India, creating a gray area and leaving users vulnerable to exploitation. The court stated that the absence of regulatory guidelines has made Bitcoin trading problematic and criticized the government for its failure to introduce rules despite reminders 2 years ago. Meanwhile, other countries like Bhutan are actively embracing cryptocurrencies and investing in Bitcoin mining, while Indian crypto users potentially miss out on opportunities due to the government's lack of action. The lack of clear cryptocurrency regulations in India has caused significant issues for Indian investors, businesses, and the financial system structure. Despite a 30% tax on crypto gains and a 1% TDS on transactions implemented by the government, there's no clarification on whether cryptocurrencies fall under asset, commodity, or security classification. This unclear regulatory environment forces Indian crypto exchanges to operate in an undefined space, subjecting them to unexpected policy changes and legal interventions. Although self-regulatory measures exist, full government regulation is needed for the industry's stability. For example, the WazirX case highlights the need for proper regulation around cryptocurrencies in India, as users file a criminal writ petition against the exchange's management after losses from a hack. The Indian court dismissed the petition due to the lack of regulatory framework for digital currencies. This negative stance towards cryptocurrencies may lead to missed economic potential and allows scammers to operate with impunity while giving law enforcement unhealthy powers to clamp down on unsuspecting traders. India is at a crossroads between maintaining this negative stance or creating protective regulations that support innovation. For more on crypto and stocks, follow Ascencore. Thanks for watching and have a nice day.